I'm rebuying Tesla stock. In this video, I'm going to explain exactly why. It's worth remembering that I sold Tesla stock between $171 and $175 per share, likely around $173, with the intention of tax loss harvesting over what I thought would be a relatively quiet period, the roughly 30 to 45 days before earnings, given that I sold about 45 days ago. I thought this would be a great opportunity to sell because it would be likely that the stock would only trend down going into earnings. That's exactly what happened. Now, I didn't time the bottom perfectly, but I wasn't expecting to buy the bottom perfectly. I was expecting to get clarity from the earnings call, from the earnings report, and the direction of Tesla, and to put aside and allay the fears that have started arising around the future of Tesla. In this video, I'm going to go through various different explanations, and I want to make it clear that I have made an over 7-figure investment directly into Tesla, and I've also made a very large additional contribution to a particular ETF that now also has exposure to Tesla again. But that ETF shall go unmentioned for this video, because this is not a solicitation for you to buy any particular ETF. Let's go through one by one the rationale. And then what we're going to do is we're going to look at the numbers. People like to say, I'm Mr. Flip-Flop, but those are usually people who are either new to the channel or just reading the titles. Reality is, my decisions are based by what I believe to be fundamental analysis and a lack of speculation. I do not like speculating. So what you're going to find in this video is I'm going to be bullish, but I'm going to be less bullish than some of the bulls might be. In fact, probably a lot of the bulls might be. And when you see my analysis, I think you'll find that even with my fundamentals, the future is bright for Tesla. So let's get into this. One thing at a time. All right, first, Elon's pay package. Elon's pay package vote comes up for vote in June. There is a substantial risk that Elon does not get his pay package approved. I will be voting for the pay package. I understand the arguments of the judge. I understand her arguments that the board lacked proper understanding or proper conflict of interest disclosure, and that maybe shareholders weren't fully informed of the conflicts between Elon and the board. I understand the judge's argument, but I disagree with it. Now, do I think that Elon should be paid what he's owed? Yes. Do I think if the plan fails, Elon is going to leave Tesla? No. Did Elon imply that maybe he would disappear if his pay package didn't get approved? Not really, but some say maybe at a 10%-ish level, he sort of implied that. I think that's really just a way to try to get people to vote, and that's fine. Now, obviously, there could be regulatory regulations around swaying how people vote for Elon, but that's an Elon problem. If the pay package does not go through, which will create some fear, uncertainty, and doubt between now and then, there will be a new pay package. I'm not concerned about that. There will just be some other pay package. Big deal. Doesn't matter. Do I think that Tesla is going to engage in any buybacks of shares? No. It would also be very stupid for them to do that. They don't have as much cash as the Uber bulls like to say, because they're only reading the cash line, and they're not understanding that Tesla's cash flow is in a tenuous position, and their actual available free cash is way less once you actually subtract the bills that Tesla has to pay. Now, they've got plenty of run rate, and they can afford to have negative $2.5 billion of cash flow for many quarters going ahead. I don't think they will. I think they'll probably be around flat to slightly negative cash flow for 2024. And 2024 will prove to be a bottom for Tesla. Now, obviously, none of this is a guarantee. This is my opinion. And the reality in markets is opinions can be wrong. Now, what I do like doing is sometimes I'll make speculative trades, but I do that for fun. I want to be clear about that. Sometimes I go, oh, Kevin's just a trader. No, I made a tax loss harvest decision, which was excellent. I was able to sell higher cost basis lots, made money doing that by basically offsetting gains I'd be paying somewhere else, and paying the government less money. And it didn't cost me anything to do that. If anything, I got paid to do that because I'm able to buy shares back for less. So I'm happy about that. I know some people say, but Kevin, you do trades. Yes, I do trade. For example, here's my P&L for today. This is, I always send stock buy sell alerts to everybody in my courses. So they were the first to know about these Tesla transactions or even the call option I had and how I played Meta this morning. We actually did a lot of that live in our course member live stream we do every day the market is open. And so I encourage you, if you're not part of it, consider joining the Stocks and Psychology of Money group. If you have questions about it, email us at staff@mekevin.com. You can bundle up. The next coupon code expires on Tuesday, so it's coming up pretty soon. The good news is, once you're in, you pay once, you get lifetime access, and literally if 10 years from now, I make some day trades or whatever I do, you'd get a notification. Now, whether you make money from these notifications or not is ultimately up to you and what you decide to do with the information. But my goal is always just to provide value and provide information. So yes, can I speculate a bit with a smaller portion of my account while still being a fundamentally long-term investor who hedges when it's appropriate to do so and who takes tax advantage strategies when it's appropriate to do so? Absolutely. But again, there'll always be some haters somewhere, but that's okay. So let's continue on. What we need to talk about next is this concept of new models. There are not going to be new models at Tesla for a while. And quite frankly, I don't care. The Tesla Model 3, the Model Y, the Model X and S are good enough. Don't get me wrong. Does it make sense at some point to have a Sprinter-style van that could be cargo or passenger-based? Yes. That would be extremely profitable for Tesla. However, that would take a completely different manufacturing setup because, quite frankly, just think about this. If you're building castings for smaller vehicles, you're now doing substantially larger, taller, longer vehicles. Maybe you'd use a different manufacturing process, but I think coming up with a van anytime soon would be very problematic. I have 7 children. I would love a Tesla van. I don't think I'm going to get it anytime soon. Do I think it's going to come in the future? And do I think that Tesla delivery vans are going to take over, let's say, the Rivian or Ford Transit or Sprinter van models? 110%. I believe that. No guarantees, but I believe that. In fact, I think Tesla is the only American EV manufacturer that knows how to go profitable. And so when all the legacy autos realize, crap, we need to do battery Ford Transits, like the EV versions, which I have, and they realize, crap, we need to actually do more of these profitably, they're going to be screwed. Tesla is doing a fantastic job of destroying the competition. And so this brings up price cuts. Did Elon start the price war? Yes. Was Elon right to start the price war? Yes. Is China playing along with the price war? Yes. Do I care? No. Now, why don't I care? It's simple. Tesla showed us that with very little revenue recognition for FSD, I mean, the reason they used for recognizing $281 million of FSD revenue for the auto park feature coming out is, in my opinion, nonsensical. It's not, like, the milestone should have been re-released version 12, not we released auto park. But that aside, they could have probably recognized a lot more. The fact that they didn't, and the fact that outside of Cybertruck, we were still over 18% margins, and with regulatory credits, which there are more available for Tesla and less available for the others now, Tesla had over 17% margin. I'm exceptionally impressed. I was extremely concerned we were going to get a substantial disappointment in margin. Do I really care that deliveries are down? No. Do I think interest rates are going to stay this high for this long? No. Are they probably going to stay high for longer? Absolutely. But deliveries falling is a symptom of interest rates. I highly believe that. Now, people argue this. People say, oh, Kevin, but other manufacturers are returning back to growth. That may be true too. It may be true that you're seeing some pretty decent numbers out of Ford or GM. But we're not here to compare to legacy auto. We're here to compare to other electric vehicle manufacturers. Because in my opinion, that's the future. I don't think hybrid is the future. I owned a hybrid for 10 years. Okay, it was less than 10 years. It was like 7 years. I bought a Prius in 2010. It was the first car I ever bought. I paid it off just as I went to go buy my first house, so I wouldn't have the high debt to income ratio. I'm not a big fan of having debt on cars. I think it's a very bad idea. That said, well, because it hurts your ability to buy real estate. That said, hybrids from Toyota are really good vehicles. And I don't ever shade anybody who buys a hybrid. Do I actually think you're ever going to plug it in? Probably not. If you get a plug-in hybrid, you're probably just filling it up with gas, which is fine. Who cares? The reality is most people use that little battery that generates as they drive around, and the hybrid will boost it back up. And you know what? It's a fantastic vehicle, safe, especially the Toyotas, and they'll get you for your distance drives without having to stop at charging. I do think the charging infrastructure is going to be a little nightmare for Tesla in the near term as more people start using them, like Fords or otherwise. I think that's going to frustrate some Tesla customers. Tesla's obviously charging the non-Tesla users somewhere around, I think it's $12.99 a month to be able to sign up to use the superchargers at subsidized rates as opposed to one-time use where you don't have to be a member. But it's another SaaS model for Tesla. It's not bad. Excuse me. But the point is, are there going to be some frustrations coming ahead? Yeah, of course there are going to be some frustrations coming ahead. And of course, deliveries in the near term are going to be weak under these higher interest rates. Do I really worry about that for the future? No. Now, can I sit here and give you a guarantee that Tesla's delivery reductions in the face of, maybe legacy auto doing okay is a fundamentally good thing? No. This is a belief item. So I just want to be clear here. This is a belief item. And I'm going to show you how that actually works into the valuation of Tesla and why this is very important. Now, we need to talk robotaxi. I am putting absolutely no valuation on robotaxi. I don't think we're close to it. But guess what? It doesn't matter, because what I'm going to show you in just a moment when we go through the valuation model is it doesn't really matter if we have FSD revenues at 0 and robotaxi revenues at 0. And I'll show you why. It has to do with what's happening in 2024 and these weak deliveries that we're now expecting with potentially flat growth for the year, although Elon said maybe a little bit more than flat growth. This is actually a wonderful thing. We are creating the December of 2022 for NVIDIA. Go look at what NVIDIA was trading for December of 2022. I'm pretty sure when I launched an ETF, this is not a solicitation for the ETF, we bought it nearly at the bottom or right before the bottom in the chip sector. Actually, I'm pretty sure I launched my ETF and then it kind of went straight down for 3 weeks. Again, this is not a solicitation for that. I'm not even going to mention it, okay? I just want to be very clear about that. FINRA gods, this is not marketing. The point is, the chip sector recession was a bottoming process. Think of Tesla as NVIDIA December 22. And again, I'm going to show you in my model why I'm so confident in saying that, just like I was confident in buying chips then. I'll also show you what I think the bottom is for Tesla, worst case scenario. So we'll go in 2 different directions. So, as far as robotaxi, to finish that point, do I really care if the car is going to be supervised at first? No, not at all. If the car is supervised at first and we're just basically creating a ride-hailing network and we're getting people using a Tesla app, fine by me. You need to get people into the habit of opening the app and comparing prices and wait times between Tesla, Uber, and Lyft. Do I think that full autonomy will come with a vision-based system? Yes. Do I think full autonomy is going to be possible in every vehicle that we own to the point where we'll never have to touch the steering wheel? Probably not. Do I think that a sort of refined version of a Model 3, Model Y with maybe hardware 5 and potentially steer-by-wire and some of these other aspects, TBD, we'll see. Do I think that will be capable of full autonomy? Yes. Yes, I do. So, let's now talk 4680 and Dojo, frankly. Both of these are, in my opinion, long shots for Tesla. And quite frankly, they don't matter. So I give them 0 value. Elon Musk himself called Dojo a long shot. So I don't really care. They can experiment with it. They can try. I'm optimistic, and I believe in the team at Tesla. I believe in the engineers at Tesla. But am I going to add anything to my valuation for Dojo or Tesla turning into like the AWS of the future? No. Let's get to where that is actually starting to produce money, and then we can talk about it. See, again, I like fundamentals, and I want to see what the margins are, and I want to see what the potential growth is, and that's when I get excited about pricing new things in. This is exactly why I do not care about pricing in full autonomy. I can value Tesla, I think, very, very well right now without it. I don't even need it. Okay, what about full self-driving take rates? Well, we actually heard something very optimistic. We heard that there are about 10% of Tesla's fleet, actually a little over 10% of Tesla's fleet, is already using FSD. Now, this is actually really exciting because version 12 should probably be pushing closer to a 20% adoption rate. And once we continue to progress, I suggest we'll go even further than that. So I'm pretty excited about where we're going with full self-driving. And I have to say, there have been a lot of sort of frustrating moments that I've had with FSD where I'm like, wow, I feel like I'm taking, I'm going 2 steps forward and taking a step back. But guess what? That's called growing a business. When I grow my business at HouseHack, we don't just go up and to the right in a straight line. Everything is waves. It's kind of like we're like on a little dinghy in the ocean. All right, boys, we're going this way. That's a startup. And Tesla is revolutionizing the auto industry in a way where there are going to be 2 steps forward and 1 step back. But I want to be very clear about Tesla and the artificial intelligence revolution. The vast majority of artificial intelligence is complete and utter bullshit. ChatGPT is great, and people are going to go GPT, and that's it. We're going to go GPT-5, and then we're going to go GPT-10, and robots are going to take over the world. Yeah, maybe eventually. But I'll actually draw for you what I think the AI adoption is going to look like. And let's just say outside of Tesla, and I'll talk about how this affects Tesla, it's bullshit. Okay, so this is what it looks like on screen now. I believe that neural nets and artificial intelligence received investment and interest at roughly this sort of path. Remember, when I launched my real estate startup, HouseHack, we have a fundraise coming due, by the way, on May 1st. That's next Wednesday, JPOW Day. Oh, wow. We're going to talk about JPOW in this video as well. But anyway, go to househack.com/2024. We're going to be in a bunch of different cities. So if you are in Scottsdale later today, if you're in Vegas later today, come on by. Tomorrow, if you're in Oklahoma or thereafter, Nashville, Miami, Tampa, Orlando, Atlanta, New York City, Richmond, Virginia, Toronto, Chicago, Denver, Dallas, Houston, Austin, San Diego, Long Beach. If you're in any of those areas, look forward to seeing you there. Just go to househack.com. You can click the little investor tab at the button and you'll see the little RSVP button. You could RSVP so you can give us a little heads up as to how many people are going to be there. That'd be greatly appreciated. So we've been using neural nets at HouseHack for identifying good deals in single families for quite a while. And I think that the GPT moment, which we've done since about 2019, 2020-ish, I think the GPT moment really did this. Now, I think that people think, and so I'm going to draw what people think. I think people think the GPT moment is going to be like that. I don't think so. Unfortunately, I'm not that optimistic. I think the GPT moment is up, over, and at some point in the future, we'll get another leap. But I think we're going to stair step. And quite frankly, I think we're here right now. So when I hear the clown from ServiceNow going on CNBC and pitching how great their freaking artificial intelligence is, and then I go look it up and it's a chatbot, it makes me want to vomit. Whatever. The only companies that have true artificial intelligence, in my opinion, shout out to Palantir, they were big data before artificial intelligence was artificial intelligence. Snowflake's probably in that world. These are big data analytic companies, big fan, and Tesla. That's it. And so that leap forward on the left, right here, that's what enabled FSD 12. The GPT moment was actually the moment that Tesla's full self-driving became amazing. So, is it perfect? No. Do I care that it's perfect? Or not perfect? No, I don't care. So, what do we have to talk about next? Margins and layoffs. We just had 18% margins with, well, let's just put it this way. No layoffs. Think about that for a moment. We're basically the same vehicle pricing as Q1, but we had a staff, I don't want to say this because it's insensitive, but the staff was essentially bloated for the level of deliveries that were being done. That's unfortunate. And my heart goes out to all the people who got laid off. It's terrible. Yes, blame Jerome Powell. Elon Musk should have blamed Jerome Powell. This is not a Tesla problem. It's an interest rate problem. My take. Now, once we get past that, think about what we realize. We had 18%, Cybertruck excluded, regulatory credits included, vehicle margin at Tesla. And we had bloated staff by, whatever it is, up to 20%. It was at least a 10% layoff. But some people think it's going to average out to 18%, which is ironic because that's right around where the margin is. Whatever it is, that's going straight to the bottom line. Because we're probably going to have a similar amount of vehicle deliveries. Maybe we'll have a little boost for Q2. That's fine. But if we could do it without all of that extra staff, great. Again, my heart goes out to the people who got laid off. That's absolutely horrible. But it is part of a business cycle. And as insensitive as that sounds, and it sucks, it is actually really good for margins for Q2. And I'm only going to underwrite this company with 18% margins. You don't even want to know what happens when I bump this back up to 20% margins. Oh, that's crazy. Energy. Based on the Enphase earnings call, which we have been watching for about the last 3 quarters, the CEO of Enphase believes that we are in a bottoming cycle for channel inventory in solar and will probably bottom out in this quarter or next quarter. That is also a benefit to Tesla. Tesla's solar numbers were probably very bad in Q1, and that's why they hid them from us. I did not like that. Do I care? No, because I know they're bad. Energy will be the future. Solar panels will be the future in America. They're in more and more states becoming mandatory on new construction. I have solar panels on my house. I've got an Enphase battery. I'm a big fan. I'm a big supporter. And there's not much more to say on that. Before we get into valuation, we should make it clear that Jerome Powell, I believe, is going to talk a little dirty to us next Wednesday. Tomorrow we also get PCE. Do I think either of these are catalysts outside a buy the dip opportunity? No. That's because I think we are at peak interest rates. I think Jerome Powell telling us we're at peak and then turning around and saying, JK, we're no longer at peak. Well, let's just say I think that would be very bad. So, Jerome Powell is not going to rug us and go for higher rates, even in the face of the stagflationary GDP report. We will just stay here longer. And guess what markets are now pricing in? 1 rate cut for the year. That's like 1.3. I think worst case scenario is we get 1 to 0 rate cuts. I'm okay with that. I recognize that this is going to be a bottoming year for Tesla, and I am okay with that. Now, what I would like to do is make the following clear. The spreadsheet I'm going to show you is, frankly, probably bearish, but it's actually bullish. So I'm going to show you how absolutely rude I am on this, and we're going to use Wall Street's projections of EPS growth. Because keep in mind, Tesla's EPS growth is in the frickin' toilet right now. Their earnings per share are projected to be $2.60 per Wall Street, and Wall Street might be high this year. But folks, this is what people forget. When you have incredibly low comps in 2024, guess what happens as we go into 25? We're going to have some of the most ridiculous EPS growth for 2025. All of 2025, looking over 2024, should show ridiculous EPS growth. Positive. Okay, great. Now, what happens when we go into 2026? Well, by then, hopefully rates are lower, and that is accretive to EPS. All right. So far we've been one take in this video. I hope you enjoy it so far. If you hadn't had a chance yet to subscribe, please make sure to subscribe to the channel. My name is Meet Kevin. I tried putting that on the ballot in California. Let's just say it didn't work. I'm gonna take a quick break and drink some coffee. So my friends, here are the fundamentals. The fundamentals are, in my opinion, written out as expecting only 2.25 million vehicles to be delivered in 2026 on the low side. That's pretty pathetic. Like, that would be really bad. Elon's goal is to get to more than 3 mil. Tesla's goal on their earnings release is to get to close to 3 million. They didn't give a time frame for that. Whatever. So I just put a range of options in here. But this is realistic. And honestly, do we need another Giga? No. Have you ever been to Giga, Texas? It's big enough, okay? They do things big in Texas. I need more coffee. I don't know. Do I need more coffee, or do you like this versus the hyper Kevin? I don't know. I mean, I like coffee. Anyway. I'm only expecting energy to grow maybe 80%-ish from where we are now, 70% over the next 2.5 years, although I do think we're coming out of a bottom. As you can see here, I'm giving 0 to insurance, semis, full self-driving, Tesla bot, robotaxi. I don't care. If you want to call that margin of safety or icing on the cake, that's what I would do. Am I actually going to value that? Nope. That's all part of the hope package. But I like companies that I can invest in where I have a fundamental foundation, and then I get some hope on top of that. It's like I pay for the fundies, and then if the hope plays out, great. If the hope doesn't play out, who cares? I need fundies. All right. Sorry, I had to cut the video there. I really didn't mean to do that. I thought I could get through and do this all sort of in one shot, but I had a trade going. I didn't think that this was going to be a trade that I would have closed out on today, but I did, because as I was sitting here, I go, oh, okay, oh, okay. So I had to make the trade, and then I had to send an alert in the stocks and psych group, as I always do. But let's just say that makes for a nice P&L today. Holy crap. 69 on Tesla. Let's go! All right. So where were we? Remember, you get lifetime access to those in the stocks and psych group. All right. This is 18% margin, folks. We hit 18% margin ex Cybertruck. That's in ramp. It's in ramp. So you have to understand, when they're producing, very few Cybertrucks, like, it's gonna be very expensive, especially at the, using the 4680s, which they're only scaling to the level of Cybertruck demand. I might take my tendies and buy a Cybertruck now. I'm getting excited again. This is 18% margin. It's going to be higher after the layoffs. And quite frankly, the collapsing prices of lithium, freight, and the deflation that we're seeing in auto parts is really good. So good job, Tesla. The efficiency is working. The core premise of their business, that it was the original reason I invested with Tesla, efficiency in manufacturing, a revolution in manufacturing, is getting better. So 18% is written in here. Watch what happens when I change it. Now, I want you to also note this. See right here, FSD? Remember, I gave 0% FSD revenue, but I'm putting $1 billion of costs in here per year. or per scenario, right, for 2026. And as you can see here, the expense margin is the way I would incorporate FSD. I'll just leave it in that expense margin. Okay, good. So we leave pretty much everything else the same, you know, OPEX, whatever. This is just sort of quick little fundamental. I think by 2026, easy mode is $2.78 per share of EPS, which I'm really excited about because it's really, really low. So Wall Street right now has a substantially higher expectation than I do. Wall Street right now for 2026 has, and this will show you how conservative I like to be, like their 2024 estimate is $2.60. Okay? After $2.60, they think in 2026, EPS is going to be $4.72, which would be higher than the highest level I have on the right side over here of 382. And they think growth for the next 4 years on EPS will average 32.5%. Yeah, that's because we're hitting the floor, boys and girls. Oh, it's getting juicy. All right, so what do we have? At my crappy dappy EPS, this is a $218 stock. Now, a lot of people have been saying, but Kevin, you've been nervous about the economy. Yes, I am. And I've been reading earnings calls, and every earnings call I say says, no indication of any change. We've been watching this guy on YouTube, Meet Kevin, who's telling us we should address what's happening with the consumer. Things are stable. Does that mean things can't flip and turn? Of course not, but we got to watch for other signs. So far, we're just not seeing it. Yes, we had the year-over-year charge-off problems at the banks, but has that actually gone so bad? The fact that Facebook is down 10% on missing guidance by 1.3%? Folks, that's not a problem. That is an opportunity. I actually exposed myself to Facebook stock for the first time ever today. Again, you'd know if you had the alerts from Strong Group. Now, all of these numbers here reflect a 2.4 PEG ratio. I usually like to use 1.67. I'm using 2.4 because I think once the bottom is realized, the market's going to get pretty dang excited again about Tesla. Even in the face of recession. Remember, I think Tesla is not inflation and interest rate resilient. They are not. I think they're recession resilient. And that's actually what Elon is building the foundations of right now. Layoffs, focus on efficiency, keep margin up, let's sell what we got. And as costs come down, we can lower prices. And it's actually a win-win. Tesla maintains margins. Yeah, prices might come down, but guess what? The consumer wins. So these numbers are built at, the numbers that you just saw were built at 2.4. I did change them to 1.67 really quickly between that cut there, just so you could see. This is what I think the floor is. So with my crappy numbers at 1.6 peg, which you can see that right here, at 1.67 peg, you're at 151. That's what I think the floor is. Now, if I change this back to what I think, the 2.4, and again with my crappy EPS numbers, I think we are easily a $200 stock, probably between 218 and 300, and these are with my stupid EPS numbers, okay? If you change this to just the Wall Street consensus for 2026, you go 4.72 for 2026, enter, that's another $150 on there. You could even then drop this PEG ratio again to 1.67 if you wanted to, still 256. So, like, I see a floor at 150. Volatility is very high on this stock right now, so do I think there's an opportunity maybe to sell some options, you know, or you know, farm a little bit on selling puts or calls? Maybe, but there's also the real risk that it just goes, whoop, who knows? It's just the thesis that I have. So, yeah. I think people who pay attention to my courses and my videos very closely will recognize that this is data-based. When you watch my video reviewing the earnings, I'm very clear about what I'm happy about and what I'm sad about. And a lot of people looked at that and said, Kevin, this actually sounds fundamentally on the net really good. And yeah, it is. Now, again, don't get me wrong. Obviously, I'm exposed to Tesla stock again, but I told everyone this was going to be a 30 to 45 day tax transaction. Great. We made money. Able to buy the shares for less. You know what? Please sell off 5% tomorrow so I can go buy more. That people like to reverse trade me, so go ahead. But these fundamentals are great. And so now, again, I'll drop this, okay? Well, let's drop this down. Let's go bear, okay? 167, and then we're going to go with Kevin's EPS. So actually, I just have to undo that. There we go. And then we'll make this 167. 167 with the worst case scenario at my EPS. So my EPS, 167 peg ratio, 151 bucks. So I think that's the downside risk. And obviously, you're going to have some thresholds that you need to break out of. So some of the ones to pay attention to, we'll just go ahead and pull up Webull right now so you can pay attention to these. There's a day trader line at 170. Ooh, what a surprise, an even number. Next one's 174, next one's 175. All of these are in play, in my opinion, over the next week. Not only are these in play over the next week, but quite frankly, I think we go out here on the day chart. Oh, I hate it when numbers is bouncing like that. I think we are going to retest 221 potentially very rapidly. That's my take. I'm sorry. Again, my goal is just to be transparent. I think we're going right back to 221, and that's kind of where I'm looking at going, okay, all right, like that's reasonable for pricing in this year and next year. I keep some dry powder. You know, it's not like it's an all-in investment. Keep some dry powder and some cash, because I do think there can still be some headaches with some of this in earnings season and obviously rates. But am I terribly concerned after this earnings? No. Took me a couple days to really digest it all and to come up with this thesis. But here it is. Full transparency. 7 figures deep in Tesla. Actually, I think now 7 figures deep on the ETF ad as well. And thanks for watching. Consider subscribing. Check out the courses on building your wealth. Get those lifetime buy sell alerts. Again, the goal is to give you ideas. It's not designed for you to copy, and I'm not promising you're gonna make money on every trade or whatever. Like, I wanna be very, very transparent in advertising, like, they're trade ideas, right? You get my long-term trades as well. So, if you want those trade alerts, hit me up. Thanks for watching. We'll see you in the next one. Goodbye. Good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.